What's up, guys? It's May 28th, 2025. Looks like we had a sideways day in the markets. Bar 1 is right here. Small rally, sold off, and went sideways for the majority of the day. Had a breakout, and then it reversed back to the high of the trading range, and then sold off. I want to give a quick shout out to all the members and subscribers. I appreciate you guys joining. And for the new people, my background in trading is I've been studying algorithms for quite some time, and last year I took Systems Academy with Ali. It's called Quant Systems. Check them out. And yeah, so I've been building systems, and that's how I trade systematically. The goal is to become a discretionary trader. This August, I would have been trading for 4 years. So in 3 months, I've been trading for 4 years. It's been pretty fun, and I'm glad to have met you all. So this is the weekly chart. It's a daily chart. I do these breakdowns based upon market cycle and leg count, and I'm going to start really just talking about those two things, and then at the end of the videos I'll talk about trade setups and the trades I took. I didn't trade today because of FOMC minutes, and I do have a part-time job, so I'm not a full-time trader yet. I have a part-time job, and sometimes I miss the RTH session, but I do trade the extended hours a lot, and I will be starting at the end of next month, most likely starting to stream again. So we got the weekly, we got the daily. Weekly charts rallying. We bounced off the EMA, and bulls are trying to make a new high. They want to get above last week's bar right here. That's the first target, and then the next target is going to be 1R of the bar. Looks like they're going for it. I took a peek at the overnight session, and it's rallying big time right now. This is a really big rally. Yeah, I'm looking forward to trading this later. I'll probably end up catching the more range part of it tonight, and it'll be fun. So here we are. Bulls want to catch, they want to tag last week's high and then break out. Weekly chart, we are in that third leg. Leg 1, pull back, leg 2, pull back, leg 3. This could be a trading range after bulls make a new high, possible pullback, or this bulls can break out of this range here and go again. All-time highs is right around here, and we're not too far away. Let's see, what is that in points? So what, 25? So we're about 260 points away-ish, give or take. I could just measure it. 250-ish. That's just an estimate. Daily chart, we touched the EMA and we're rallying again. I think this was a good buy for the bulls because we have just about 10 to 20 bars above the EMA. We have 15 bars above the EMA. So the first touch of the EMA is going to be a good buy. The first target for the bulls is going to be the recent high and then a new high. 1R of the trading range. And this is the trading range, which was this big bar here. Again, I counted 3 legs. Leg 1, pull back, leg 2, pull back, leg 3. That's the leg 1, pull back, leg 2, pull back, leg 3. This leg 3 broke out of this swing. Leg 1, pull back, leg 2, pull back, leg 3. Third leg was small, barely made a new high, and then sold off. Bears got 2 legs, 2 to 3 legs down. Leg 1, pull back, leg 2, pull back, leg 3. Bounced off the EMA. This bar was a bad close for the bears, good for the bulls. It closed bearish, but there's bullish price action towards the EMA. So it shows us that it sold off and then rallied. This bar starts at this low here, so that's the first leg, pull back, and now bulls are going for that second leg. I just want to take a peek at the overnight session again. It's still rallying. Wow. That first pullback's going to be interesting. Okay, so bar 1, bull bar, closing on its high. Has a tail from going off yesterday's price action. Leg 1, pull back, leg 2, pull back, leg 3. Why is it 3 legs? Because, well, yesterday's 79 is an opposite bar. So leg 1, pull back, leg 2. And then this bar, today, bar 1, just barely broke this trend line. So the low of 81 is 37.50. The low of here is 37.50. So it's a double bottom. I'm still counting that as a start to a leg 3. Leg 1, pull back, leg 2, pull back, leg 3. This is the leg, this is the pullback leg, and then it rallies. So bar 1, bull bar closing on its high. I think there's enough momentum to get a second leg, and we see that with bar 2. So if we're just looking at today's price action, leg 1, pull back, leg 2. Bad follow through 3. It's a small bar after a big rally yesterday. We rallied a lot. So this could be a climactic leg from yesterday's price action. It's a nice looking leg. It's a big leg. It has bigger bars. And there's gaps in it. I do pay attention to gaps. If gaps are closing, trailing range behavior. Gaps are staying open, trending behavior. Bar 3, bad follow through. And then we see bar 4, big bear bar closing on its low. That creates another bear gap with bar 5. Here's that bear gap. Follow through. Bar 5 is follow through. Bar 6 is follow through below the EMA. So that's good for the bears because between yesterday's price action, the last time they got a full bar closing below the EMA, you can say 72, 76. It just ended up rallying. Bad follow through on 72. 76 rallied. So now we got 1, 2, 3, 4 bear bars in a row. Something that hasn't happened since this on Friday. And even that was a big gap down that rally. So bears haven't had too much strength. So take this breakout with a pinch of salt. Now that doesn't mean bait it. I'm not saying buy it. What I'm saying is this is the first time bears are starting to get follow through below the EMA after a gap up and a rally. Big gap. Bulls are getting trapped. Gaps happen at support and resistance. So here's support, there's support. And now we have a gap that lines up bar 4's gap. Bar 7, first opposite bar. So it's a pullback. So leg 1, pullback, leg 2. Leg 1, pullback, leg 2. Then we have another opposite bar, bar 11. Sells off, rallies, that creates a leg. So it's a pullback. We're in the third leg now. A couple ways I count legs is I look at opposite bars and I look at trend line breaks. So for opposite bars, we're in the third leg. Leg 1, pullback, leg 2, pullback, leg 3. For trend line breaks, we're actually still within this trend line here. Bar 11 breaks the trend line and that puts us in a second leg. So there's a couple things going on that one's not better than the other. You just have to be cognizant. I think there's enough bear bars closing on their low for bears to continue down lower for 1 to 2 more legs. Bar 11, pullbacks. It has trailing range behavior, so sells off and rallies, pullback. Bar 12, bear bar closing on its low, follow through 13, sells off and rallies. So now we have a fractal pullback here. Bar 14, bear bar closing on its low. Something we really haven't had. I mean, we've had this closing around its midpoint. This is closing on its low. 12 is closing on its low. But there's a lot of overlap. Trading range, bars, a lot of bull legs within this, a lot of tails. Bar 15 rallies up to the high of 14. I'm going to see if the high is broken. 14 high is 27. The 15 high is 27. I'm looking up here for the numbers. I just read the last 4. So there's a double top and it sells off. Or another leg lower. 16 is the inside bar. 17 bear bar closing on slow. Bad follow through 18. Now we're in that third, fourth leg, depending on how you want to count. Leg 1, pull back. Leg 2, pull back. Leg 3. Leg 1, pull back. Leg 2, pull back. Leg 3, pull back. Leg 4. Bar 19. Big bull bar closing on its high. This is the end of the bear trend. Well, it depends if you want to call this a bear trend or you could just say it's a pullback from yesterday. I think it's more of a pullback from yesterday, testing right around here at the breakout point above 30. Bar 20, bear bar closing on its low. Bar 21, bear bar closing on its low. So although there's still bearish momentum, the market's going more sideways now because bar 19 is the big bull bar. Something we don't really see in a bear trend. Bears did sell this, so 19 was just a pullback, but it's also late in the leg count. It's within the third or fourth leg. Leg 1, pullback, leg 2, pullback, leg 3. Big bar breaking trend lines. Bears short this, we're close to the EMA. Then we go more sideways. 21 it makes a new low, but it doesn't make a new low by a big distance. So it doesn't close down here. It just barely closes below the swing on 18. 22, bull bar closing on its high. We have a 2-bar reversal, but context for the 2-bar reversal is bad. The picture looks nice, but the context is bad. We're above the EMA, so that's a bull regime. But we have a lot of selling pressure just for today. Bad follow through 22, bull bar closing on its high. Bad follow through 23. 24, bear bar closing on slow. 25 has a tail and then sells off. So there's 3 legs down on a fractal perspective. Leg 1, pull back, leg 2, pull back, leg 3. If you're looking for a second leg down from 23, 24, 25, be cautious. We're in a trading range now. We've been in a trading range for a while, but now we're past the third leg on the bear side. Definitely trading range behavior, so probabilities favor reversals. And then look at 26, sells up. What the heck? Look at 26, sells off and then rallies. So now the bears that bought this are trapped. They're going to want to short higher and get out at break even, and that's what we see on 27. There's a tail on 27, so we know bulls were trying to buy 26 and bears were shorting higher to get out at break even. They got trapped down here. 28, bull bar closing on its high, but it's a small body. It's an inside bar type of a triangle. I think bulls are trying to get the reversal. 29, bull bar closing on its high, but it has a tail and it's still under the EMA. If you're looking to buy this, I think you're going to have to use a wide stop and be willing to scale in or wait for bars above the EMA. Bar 31, bull bar closing on its high with follow through on 32. Okay, so now we have a bull bar closing on its high. That's good. However, there's a lot of selling pressure, and usually the market can contract when we have FOMC minutes or FOMC guest speaker coming up. 33, bear bar with the tail, sells off and then rallies, creates so it sells off from here and then it rallies to the high of 34. Then 34 sells off to the low of 35. We're going to a tight trading range. All the way through here is a tight trading range. Regardless of the trading range, there's still 3 legs. Leg 1, pull back, leg 2, pull back, leg 3. And this third leg has 2 legs of its own. Leg 1, pull back, leg 2. Trading ranges, second leg traps are common in trading ranges, and that's what we see here with 46. It's a second leg trap. It's testing the breakout point around 7, 8, 9, and it sells off for a leg down. 47, bear bar closing out slow. 48, we saw from the 47 high, it sells off to a 48 low. Leg 1, pull back, bounces off the EMA. I can see why people think that's a good buy. However, if we think about how many bars do the bulls have above the EMA, they don't have many bars above the EMA. And the bars that they do have had bad follow through. So 32, bad follow through. 36, bad follow through. 38, bad follow through. 46, bad, or you could say 43, bad follow through. 46, bad follow through. So this could just be a pullback from this leg down. And it ended up being a pullback. Right around there is the second leg. In trading ranges, pullbacks are longer than usual, so delayed second legs are common. 49, bear bar closing out slow, follow through 50, follow through 51. 50 and 51 both have tails, so we know bulls are trying to buy lows again. I think it's best to just wait for the breakout here. Tight trading range, FOMC minutes are coming up, so it's a hard trade. I usually don't trade FOMC days just because of this exact reason. It's easy to take a loss, and then in the small range, you start to size up, and then one thing leads to another, and you can blow out a count. I've definitely been there. If you did that today, don't feel bad. It happens. It's just part of the game. You'll learn over time. So we get 1, 2, 3, 4, 5 bear bars in a row, trying to get a second leg down. However, we have a deep pullback. We're in a bull regime. We've been more sideways to down. Every time bears try and make a low, it gets bought. Every time bulls try and make a high, it gets sold. That's trading range behavior. We're oscillating around the EMA. When the lower time frame EMA lines up with the higher time frame EMA, that's generally trading range price action. There's no slope, so no momentum. Where are we? 55, bull bar closing on its high. Again, bad follow through 56. 57 has a tail above it, so bears are selling the low of 47, and that could be a second leg. Leg 1, pull back, leg 2. Again, second leg traps are common. Sells off from the high of 57 to the low of 59. There's a bull leg. There's a bear leg. Then it pulls back from 59 to 62. Lots of overlap, lots of tails, two-sided trading. And then finally, bears get the breakout, 63, 64, and 65. 65 is a big bar, testing the higher time frame EMA. Very bad close. Right here is a bull leg. 66, bull bar closing on its high. The 66 bull leg starts down here. There's a small tail, so you can say leg 1, pull back, leg 2, pull back, leg 3. 66 is strong enough to get its second leg up. 66 has enough momentum to travel one tick above it, and it does with 67. So we have a pullback. Bulls are eager to buy the pullback because they think this is a 2-bar reversal. They buy the pullback and they close on 68's high. They close on 67's high. 68, big bull bar. Closing above its midpoint, but it has more tail, so it could be a trading range. We are in a trading range, and there could be sellers waiting at highs. It's a new high here, so bulls are going to sell out of new highs, and bears are going to short the pop. Then for the last leg of the day, for the last 2 legs of the day, 69, big bear bar. Then we have a pullback within it, so it's weak. It has more tail than body, but it does have a big body, bigger than before. 70, inside bar. I think it's starting to become a triangle, breakout mode, and then we see the bears break out, 71, 72, 73. 1, 2, 3, 4, 5 bear bars gets the bearish breakout, 74, and then we start to pull back. Big breakout, 77. Bad follow through. There's also 3 legs down. Leg 1, pull back. Leg 2, pull back. Leg 3. That's a wedge bottom. Here's a wedge bottom. Here's a wedge bottom. Bad follow through for 77 on 78. It's a bull bar. And then we see 79. Bears try and make a new low. They get trapped and it rallies, trapping them on 80. The bears that got short here are not going to be able to get out for a loss today because the 81 low has to go to 50% of the rally from here to here. Take a look at the overnight price action and see if that's going to get a second leg. Okay, so now we're starting to sell off. Board's going to look to buy support. This is strong enough to get a second leg. A second leg just means a miniature leg in that direction. The minimum is just a piece of a leg in that direction. The minimum objective would be 1 tick above bar 208, and then the ultimate measured move would be 1-to-1. But that's I think that's a hard ask, but we'll see. There's enough momentum, anything can happen. I didn't take any trades today. I will be trading tomorrow and so on. So hope you guys had a good one. If you have any questions, let me know. If you learned something, share the show. Don't be a hoe. If you have any questions about how I find trades, please ask me. At Scalp 1R bars, I'm going to try and start adding a little more discretionary into my trading, but from a limit order perspective. So if you guys learned something, if you did, let me know what you learned in the comments. If you have some questions, ask me in the Discord. I love seeing you guys talk, and the question you guys ask me is great. Thank you for your time. I will talk to you tomorrow. Have a good night, everyone. Bye.